from an Elliott Wave perspective, market moves 5 waves in the direction of the trend. And it appears as though Bitcoin has only made 3 waves progress from that 2018 low. So the good news is that appears to be a 4th wave coming that we're in the middle of right now, and then also a 5th wave up into new all-time highs. The downside is that it appears as though this 4th wave is still in progress and it's not complete yet. The first possibility is that we've got an extended first wave, and within this extended first wave, waves 3, 4, and 5 are going to be relatively shallow. If indeed this wave C has ended right here, then the market may be getting ready to correct back down into the mid-30s. This is another possible way that we could label this. We've got a very large wave 1, and that we are unloading in an extended wave 3. Hi there everyone, and welcome to See the Waves. And this analysis for Bitcoin, we're going to use Elliott Wave in order to get a better understanding of what may be going on within the market. I'd like to start off with this weekly chart for Bitcoin. And the important thing to take away from taking a look at this chart is that from an Elliott Wave perspective, market moves 5 waves in the direction of the trend. And it appears as though Bitcoin has only made 3 waves progress from that 2018 low. So the good news is that appears to be a 4th wave coming that we're in the middle of right now, and then also a 5th wave up into new all-time highs. So if you're interested in Bitcoin, if you hold some Bitcoin, the good news is we're probably going to see some new all-time highs here. The downside is that it appears as though this 4th wave is still in progress and it's not complete yet. So this would imply that we're going to see some sideways grind. Now, a couple of things that we can learn from this chart using Elliott Wave as our guide is one of the things is the guideline of alternation. And that is typically wave 4 has a different type of corrective pattern than what we see within wave 2. Wave 2 was a zigzag pattern. Therefore, the guideline of alternation suggests that wave 4 could be a flat pattern, or wave 4 could be a triangle pattern. So a flat pattern is going to look something like this, and then it'll move higher in a wave 5. So that would be a flat pattern. A triangle pattern is going to look something like this, and then we'll come down in a wave C, wave D, wave E, and then we'll move higher. So wave 4 does appear to be incomplete. Using the Fibonacci retracement level here, I've drawn it from the beginning of wave 3 to the end of wave 3, and you'll notice that prices have come down and rested upon that 23.6 level. That is the minimum retracement level for corrective waves. A lot of times wave 4 will come down into the 38% retracement level, which is down here near 22,000. So I don't know if it's going to get that low. It doesn't have to, but that is one area to keep an eye on, that if we do get down into the 20,000s, I think it's going to be a pretty good buying opportunity. So, but I don't think we're going to get much below 30. And the reason being is we have a lot more sideways grind to come. I think this is going to end up being a triangle pattern in wave 4. One of the reasons why I think that's the case is if we look at the time that it took for wave 2 to develop, wave 2 took 37 weeks. And wave 4, if it were to take about the same time, would take us out into early January. Right now, wave 4 is only about half that length of time here. Just a second. So we're about 19 weeks into the length of this current corrective wave. So we're probably going to see some range trading taking place between this low around 29,000 and the high up near 60,000 or so for the next several of months. Let's dig into the daily chart and what the specifics for this triangle pattern might look like. Okay, so we've got our all-time high from April the 14th, and we've got a real nice impulsive wave lower, finishing wave A, and then a 3-wave corrective move higher in wave B, and then another impulsive wave lower in wave C. So the A leg of the triangle I'm showing was completed on June the 22nd. We've got some real nice symmetry within this impulsive wave lower. If we take a Fibonacci retracement level from the length of wave 3, you'll notice that wave 4 ended right at that 38% retracement level. That is a very common stopping point. Looks like a triangle, so we've got alternation between this triangle and this wave 2. So this looks like a really nice impulsive wave. It does have one little thing that makes me consider other possibilities, and that is we've got a truncation here in wave 5. Wave 5 could not quite make it to the end of wave 3. Truncations are allowed within Elliott Wave Theory. They don't happen very often, but in this instance, everything else checks out within this impulsive wave lower. So I feel confident in labeling this as a truncated 5th wave within the A wave. Now, after this A wave, we've got a 3-wave move higher in the B wave, and then another impulsive move lower that ended up being our false breakdown and our C leg. Now, this C leg did move beyond the end of the A wave, and so everything checks out. We've got a very sharp move. This whole move down to June 22nd would be A leg of a larger triangle pattern, and being A legs of triangles do tend to be very sharp, quick, and fast. And so peeling back 50 to 60% of the market price from the April high down to that June low, that was a quick correction. So this would be where A of the triangle finished. Now from there, I think we're rolling higher in the B leg of a triangle. Now the B leg of a triangle is going to subdivide as a triangle or a zigzag or a multiple zigzag pattern. And so coming with that type of a bias, it looks like we've got A, B, and that we are well more than halfway through the C leg of the triangle. One way that I'm looking at this, so there's two different possibilities for this current rise. The first possibility is that we've got an extended first wave. And within this extended first wave, waves 3, 4, and 5 are going to be relatively shallow. Now, what's interesting about this is we still have alternation between wave 4 and wave 2. Wave 2 was more of a zigzag type of pattern. Wave 4 was a sideways complex correction. And so we still have that guideline of alternation in place. It's just that wave 1 is the extended wave and a very long wave. So one thing that we can look at within an extended first wave is if we draw our Fibonacci retracement level, many times after you receive an extended first wave, you'll get a retracement back to the 61% retracement level. So that's going to be down here near 36,000. If indeed this wave C has ended right here, then the market may be getting ready to correct back down into the mid 30s. Now, I can't say for sure if that's the case. It is certainly one way to label this. This has a lot of the markings, a lot of the structure, a lot of the harmony and wave relationships that suggest this is an extended first wave, and that wave C, and that this wave C higher, which makes up the entirety of wave B, well, I can't say that the entirety of wave B. Wave C is over. This could end up evolving into a double zigzag. But nonetheless, we are at risk of falling back into the mid 30,000s, like 35, 36 area. I've got this extended wave 1 is negated here at this line. And this is where if price were to extend higher from near current levels and moved up above this horizontal line near 55,000, that's the point where wave 3 would be the shortest of waves 1, 3, and 5. We know from our Elliott Wave studies that wave 3 cannot be the shortest of 1, 3, and 5. So if we do see an immediate rise up above 55,000, that means this wave count, this extended wave 1 wave count is negated and is no longer possible, and we can place our focus on the other alternatives. What are the other alternatives? This is another possible way that we could label this. We've got a very large wave 1, and that we are unloading in an extended wave 3, or a larger wave 3. Now, I've got this horizontal line parked near 46,759. This is where the top of wave 1 resides. We came very close to it today. So if we break down below 46,759, then that might suggest that perhaps a more meaningful top is in place, and that we're taking the next train down to the mid 30,000s. As long as we're holding above this 46,759, we can hold out for possibly higher levels, and higher levels that may push into the mid 50s, possibly even push up to new all-time highs. But we need to remember, this is the B wave of a triangle, and it is not uncommon for the B leg of a triangle to reach new highs. Let me show you how this works. So there's our end of wave 3. So we got our A leg of a triangle, B leg of a triangle that pushes up to a new high, C leg of a triangle, D, and then E. Okay, so we could be looking at a pattern like this. Within this pattern, we would be about right here. And so it is possible that the B leg of a triangle can push up into new all-time highs. About half of the time you will see that within triangles, where the B leg of a triangle pushes above the origination of the A leg, about half the time. So it would not be extraordinary, it would not be uncommon. It would be very normal if something like that were to happen. So I would not be alarmed if we see all-time highs. That does not negate this big triangle pattern that we're talking about. But if we do hold above this 46,759, and we start to move on up above that 55,000, which would negate that extended wave 1 I just talked about, then it's quite possible we could reach those new all-time highs. It's not an all-time high that you'd want to trade. You don't want to buy it. We want to wait for lower levels. It appears we are still struck in this longer term correction. Wait for dips in order to position into the long side on this. Buying new all-time highs is going to mean that you're getting in at a much higher price. I think eventually we'll get back up into those levels once this triangle pattern ends. But I think this triangle is going to linger on through the end of 2021 and possibly into the beginning parts of 2022. So there's no need to FOMO this and feel like you're going to be missing out. There are some future instances where we should see some dips. We could use those dips to buy into. Hope you like what we've got here. Go ahead and press the like button below. Subscribe if you want to see more videos like this. We'll do videos on crypto, Bitcoin, Ethereum. We also teach traders how to use Elliott Wave and see the waves on their own charts. We'll take a look at gold, silver. We've got all these different markets that we can look at using Elliott Wave as a way to help describe the market for us, so we know what to expect. And go ahead and make your comments down below. We will see you in the next video. Bye now.